To what extent is China's reopening a tailwind for the sector?
Yeah, it certainly doesn't hurt, right? Like, I mean, it's going to be a lot better having China open than not as we go through this year. That said, though, I think that some of the problems facing commodity demand, and especially steel, are really related to the property market. And until we see property prices move back up, and they've been down 13 months in a row, and the property developers are all challenged on their balance sheets, it's going to be really hard for us to see a year where we see a real growth in steel demand. Certainly for things like copper, it certainly is helpful. But once again, the wider economy has been undergoing so many different structural challenges over the last couple of years that there's certainly, especially with the rest of the world having as much challenge economically as it's got, we're a bit more cautious on commodity demand into this year.
Well, on that point about what's happening in the rest of the world, can you give our viewers an insight into how important China is as a whole for the mining sector, for steel, compared to the rest of the world?
Yeah, it depends on the commodity, but for steel especially, China produces around just under 1 billion tons a year of steel. Its intensity per unit of GDP or per unit of capita is 5 to 6 times that of the West. So it's about 70% of total global demand. Also, the blast furnaces there's a bigger proportion of blast furnaces, which means they use iron ore. In the West, we use a lot more scrap steel. So for iron ore specifically, China is the complete, fulcrum at this point. Other commodities, more like 50-50, but obviously, the West is going to impact everything.
So Tyler, can you explain to me then, if China accounts for so much of commodities demand, specifically for iron ore, as you just mentioned, in a year where it has basically been entirely locked down, or pretty much, close to full lockdown, why have mining stocks done so well? In your report, you talk about the mining index being only about 15 percentage points away from its 10-year high. What's going on here?
Yeah, well, as we've gone through this inflationary phase, you ended up seeing a lot of commodity prices move higher, and that's obviously, especially through 2020, 2021, into that big stimulus in China. You saw prices move up very high. You've also seen as well the rest of the markets really benefited from low interest rates for a long period of time, those long duration growth stocks. We've seen a real rotation into the mining sector. And so what that's done, though, according to our numbers now, is actually put them to a point where they're, trading at the high end of their valuations over the last 10 years. And especially into this weaker demand phase, we've started to downgrade some of our exposures and certainly taking a more bearish stance.
Well, we've been covering extensively what the impact the energy crisis is having on the European continent. And we talk a lot about these sectors that are very sensitive to it. So chemicals, of course, but then, the likes of commodities, steel making, aluminium, all of those sectors are very energy intensive. What sort of an impact is that having on the demand for raw materials?
Yeah, it's having both supply side impacts, because you're seeing all these aluminium smelters shut down, zinc smelters shut down, but it's also having a real impact on demand. Steel production in Europe, round numbers, was down sort of 5% over the last couple of months. These are big recessionary type figures. But then at the same time, this challenging power situation is going to compound as time goes on, especially as we get through the real tough months in the winter on industrial activity in Europe. And so that's going to cause, I think, even more, sort of softness in some of the demand figures.